Good afternoon. This is Gatwiri Muthara, Membership and Communications Manager with Compto National. We're just going to give it about 2 minutes to allow our attendees to come into the Zoom before we get started. Thank you. Once again, this is Gatwiri Muthara, Membership and Communications Manager with Compto National. I'm going to give it another minute to have everyone come into the Zoom. All right, everyone, it's 2:01. We have about 20 participants and we're expecting many more to come in today. My name is Gatwiri Muthara. I am the Membership and Communications Manager with Compto National. Compto is celebrating 50 years of moving the nation and expanding opportunities for minorities in transportation. We'd like to welcome you to our webinar, PPP Relief for Small Businesses, All You Need to Know. Before we begin, I'd like to thank our industry partners for their support throughout the year. They are AECOM, HNTB, Jacobs, and WSP. Before we begin, I have a few webinar housekeeping items to review. If you're experiencing any technical difficulties, please send a chat message to the host. To submit questions for the Q&A portion of the call, please use the Q&A box. Questions will be answered at the end of the presentation. This call is being recorded and will be made available to all attendees, and thank you for joining us. I'd like to introduce our speakers for today, Mr. Sandy Michael McDonald, who is the Director of the Broward County Office of Economic and Small Business Development. He's also the co-chair of the Compto Historically Underutilized Businesses Hub Subcommittee. I'd also like to introduce to you Oseremi Adekoye, Assistant Director at National Development Council. And with that, I will hand it over to Sandy.
Ms. Muthara, thank you. And Compto National, thank you. An anniversary of 50 years. So happy anniversary, Compto. Again, Sandy McDonald, the Director of the Office of Economic and Small Business Development here in Broward County, Florida. I'm also the DBELO, the Disadvantaged Business Enterprise Liaison Officer, making sure that our part of 49 CFR, Part 26 and 23 are actually administered properly. I'm going to be brief today because I definitely want to get you to Adekoye, but I want to be clear that there's things I think you should know across this country relevant to PPP and other resources. Next slide. My office, on behalf of Broward County, is responsible for small business focused opportunities. I have a local program I administer for my small businesses. And of course, I administer the federal program. We also look to aspire entrepreneurs and work with them to launch their businesses. We take businesses from concept or dream to white paper to business plan all the way to launch. And my office is actually an agency that is a supportive service agency. We work with all the county agencies because we want to assure whenever Broward County is procuring, whenever we're buying a good material or service, we find opportunities for our small businesses to participate. And of course, whenever Broward County through our transit division or our airport is spending Department of Transportation dollars, we make sure we are aligning those DBE goals. Next slide. What we want to talk about today is not just surviving the dark days of COVID, but understanding that we all have went through, and many of us are still going through, the challenges of COVID but we also must find ways to find those opportunities during these challenges. And some of those opportunities is making sure that we are all aware of the additional resources and what agencies like mine, and on the federal side, if you're a DBE, what DBELOs, once again, those disadvantaged business enterprise liaison officers, what they should be doing, what access they should have available, and how they should be helping you during this COVID and post this COVID, and understanding your opportunities. Next slide. I believe all the things that we've been hearing is clear, and it shows that more help is within reach. So we heard a little bit about PPP, the first round. We heard a little bit about EIDL when we had to deal with the economic injury disaster loan funds and the Paycheck Protection Funds. Those are things that you've been familiar with. And again, our guest speaker is going to talk to you more about the second round of PPP. But I want to make sure that you recognize, similar to Broward County working with the National Development Council, which Oseremi represents, next slide please, that there's other groups and other organizations that you should be familiar with. And in talking about the PPP briefly, were you aware of the targeted opportunities that was just announced on Monday by the Biden administration that officially starts today, where over the next 14 days, all of the lenders who are working within PPP round 2 are going to be required to be working and submitting applications for consideration for the businesses that have 20 employees or less. Oseremi is going to tell you more about that. But it's one of those things that we are aware that we need to make sure offices like mine and others, make sure all of our DBEs are aware of. Many didn't know when this new round of PPP rolled out back in January, on January 11th through the 14th. Many didn't know that initially the Community Development Financial Institutions, CDFIs, and the Minority Depository Institutions, MDIs, were the first groups to work with those small minority and women-owned businesses even before the big banks, your PNCs, your Bank of Americas, your BBTs, before they got started on the 15th, January the 11th through the 14th was simply set aside for those type lenders. That's the type of information organizations like mine need to make sure you as DBEs are aware of. So I want you to know who your DBELO is in your county, in your state. I want you to know who your CDFIs, who your MDIs, again, those minority depository institutions, those community development financial institutions. We all know about SBA, Small Business Administration, SBA.gov. We need to make sure as DBEs you have access to this information. Next slide. Something else, as I articulated about the CDFIs and the MDAs and the MDIs, another thing with the economic injury disaster loan, that EIDL right now, there's nothing you have to do. But those who got those grants, that $1,000 and $9,000 grants, additional dollars have been added, and the EIDL is going to take a look at their mapping, and there's a mapping tool to identify those businesses in those urban cores and some of those low census tract cores. And again, you need not do nothing. They're going to contact you about additional revenue that's available. But again, that's something you should be aware of, because again, though I mentioned they're going to contact you, a little time goes by and no one contacted you, you want to be contacting someone. So again, I want to make sure today that you recognize that there's different resources that are not only available, but there's organizations in your part of this country you should be familiar with, who should have this information and speaking to you on a regular basis. Next slide. Same thing about SOAR, Southern Opportunity and Resilience. These are programs that are forming now as we speak. And all across the country, you got different CDFIs again, MDIs again, and others, along with primary financial institutions who are going to be putting affordable loan pool dollars. We need to get ready to understand something. These grants relevant to CARES Act and COVID are slowly going to be going away. The ideal of these loans that can be forgiven are slowly going to be going away. But we are going to go into that day when you as a business, you as a DBE, still need access to resources. And some of those resources are going to be that loan pool, but you need to understand there's going to be some programs where those are going to be truly affordable loan dollars that are going to be made available to you. You're going to need to know those MDIs, those CDFIs, and those other organizations in your community who can help you navigate those opportunities. We know you're going to need assistance by the end of this year and by this time next year. And as you strategize your pivot or your stability or how you begin to take what is surviving and become more thriving, we want to make sure you got the right resources and the right partners that can help you. Next slide. So again, another one, the Economic Development Administration, when you start talking about their funding resources, this is just one example in my region. For the Broward County, the Miami-Dade, the Palm Beach, the Monroe, we have an organization, South Florida Regional Planning, who received an EDA grant that pre-COVID and another one during COVID from the EDA, where they can begin to make loans to help these small businesses. I just wanted to use that as an example because the SOAR, which was the last slide, the EDA, EIDL was here before COVID. All of those are loan pool opportunities that different nonprofit and more importantly, different CDFIs and MDIs in your area are aware of, that they can help you have additional access to capital. And that's is what this is about. COVID has demonstrated that we have this need. We want to make sure you're aware of the organizations who can help you identify the proper resources for you to use. Next slide. And with that, that's my information. Again, I'll entertain questions that might be in the chat box. We're certainly going to get through this so we can entertain questions you may have, but that's how you reach me. But with the next slide, I want to introduce you to one of Broward County's partners, Oseremi Adekoye, who's going to come to you on behalf of the NDC, and he's going to tell you about the drill down on PPP round 2. That's why we're really here today, to make sure you can thoroughly understand and know some of the things you need to look out for PPP round 2, as well as speaking to PP1 and some of the forgiveness activity. But he's also going to share more about their organization, because I need you to make sure that either through his organization or organizations like theirs, you find someone in your community who can be that technical assistance and resource for you. So thank you for your time. And Oseremi, the floor is yours, sir.
Thank you so much, Sandy. I really appreciate that introduction. It's always hard going after you just because you're such a prominent voice in the community. So thanks for all the work that you do. I appreciate Comto for inviting me to present today and provide the valuable resources to the small businesses all across the country. Again, my name is Oseremi. I represent National Development Council. I'm based out of New Jersey. However, NDC is headquartered in New York City, but we do operate all across the country. NDC has been around since 1969, providing assistance to low-income areas and to minorities and MWBEs across the country. Next slide, please. We do that in several ways, and we do that through small business lending. We operate fully 2 CDFIs. As Sandy mentioned, CDFI meaning Community Development Financial Institutions. We have our hands wrapped up in PPP right now. We provide technical assistance and training all throughout the process for PPP, both the first and second draw. We provide advice as best as we can on other loan programs, including the EIDL, including SOAR, as Sandy mentioned, which I'm going to go over later in this presentation. But the goal today is to again introduce NDC to you, to all that do not know about NDC so far and right now, as well as NDC's affiliates. We're going to do a high-level overview of PPP first and second draw. We're going to go over the program details, the qualifications, as well as, importantly, the documents that are required to obtain a loan. I think it's important to talk about the documents because those are what I've seen to be a bottleneck for minority-owned businesses in obtaining financing through this program, is that folks just do not know what documents are required or how to obtain those documents. So we're going to speak to the documents that NDC requires and the documents that generally you would need to obtain this loan from either your bank, a CDFI, CDC, or any organization that is participating in the PPP program in the first and second draw. We're going to talk briefly about the EIDL loan, the Economic Injury Disaster Loan, as it's specific to COVID. As most of you may know, The AIDL loan has been around forever. However, as disasters happen in the country, they are designed specifically to meet the needs of the businesses that are affected. And there is a COVID-19 related EIDL loan that's been around for about a year now. And then we're going to discuss other available resources such as SOAR, such as loan programs in Broward County, for example, loan programs in Cleveland that I've ran, loan programs in New York that we're currently running. And as I go through this presentation, Sandy and myself are going to just give tips and advice to small business owners that will help you get through the lending process, the grant process, to hopefully help your business survive the disaster and beyond, and provide the financing and the critical technical assistance that you need in order to be able to survive. Next slide, please. Again, a little bit about NDC. Again, we've been around since 1969. We celebrated our 50th year anniversary right before COVID hit in February. Here in New York, we did, and then COVID hit. But this is our impact in a glance. We've been a part of over $1 billion in affordable housing development across the country. We've been allocated close to $1 billion in new market tax credits and utilize it for community development across the country. We've done over $2 billion in private and public partnership development, whether it be real estate, technical assistance, and we've provided over 75,000 practitioners with training that include economic development training, financial analysis training, as well as small business technical assistance. We have a robust training program and actually a training office in Cincinnati, Ohio, where we design programs for small businesses, as well as for economic development individuals that include municipalities such as Broward County government and New York government to provide them with context on economic development. I think we are the longest standing nonprofit that provides and does this type of work. In addition to all of that, we also, again, have two small business lending arms, two community development financial institutions that we wholly and fully run and operate. One known as Grow America Fund, which is an SBA licensed small business lender. It's been that for over 30 years with a license to make SBA guaranteed loans across the country. Through that CDFI, that Community Development Financial Institution, we've lent over $100 million in PPP, both first and second round. And our portal is open, our application is open right now. We'll continue to accept PPP loans and process them directly with the SBA. We also participate in the SBA 7A loan program, which we've been doing for a number of years, which is a program that is not for disaster, but really for growth. And we lend up to $5 million through that program. I'll provide a little bit more detail later in this presentation. We also run and operate a second CDFI called Community Impact Loan Fund that's been around for about 5 years. Community Impact Loan Fund really started when we realized over the last 5 years that some businesses just do not fit into that SBA credit box. And we wanted to create a CDFI and create loan programs that they can also qualify for. And that was the birth of Community Impact Loan Fund. It is also a CDFI based out of New York. However, we have lending programs across the country. Namely, we have lending programs in Florida, namely the Capital Access Fund. We've lent over $4 million to loans to minority-owned businesses and women-owned businesses, as well as in Ohio, specifically in Cleveland, where we've lent over $4 million as well through the Capital Access Fund. On the Community Impact Loan Fund, we also do other lending programs where we have run the New York Forward Loan Fund, for example. We've lent to over 150 businesses for over $10 million over the last few months for COVID relief. And we will be participating in SOAR, which I'll talk a little bit about at the end of this presentation, providing the well-needed capital to the small businesses in the southern states that were affected by COVID, up to 100K flexible dollars, in addition to PPP, in addition to EIDL, in addition to the grants that you may have received or that are out there and opportunities that are out there that you can go apply for. SOAR will be yet another valuable resource and financial tool that you can use to continue to grow your business and hopefully, again, survive the pandemic. We work in over 100 TA and technical assistant client communities, providing technical assistance to municipalities and partners, as well as to small businesses across the country. So that's a little bit about NDC. Do not want to take up too much time talking about NDC, but that's what we do. We're around. We've been around for a while. You can visit our website, it's ndconline.org, to learn a little bit more. And my contact information is going to be at the end of this slide. If you wanted to reach me directly, I'll be happy to provide additional context and walk you through any of the loan programs that we're participating in and provide context and information, value information that you might need for all the other loan programs that are out there. Next slide, please. Just a little distinction between NDC, Grow America Fund, which again is our primary CDFI, and the SBA. The SBA, as it relates to PPP, is not the lender. The SBA is the administration that has put out and designed the Paycheck Protection Program. NDC, Grow America Fund, is a CDFI. I have a license to lend across the country as just a lender. We participate in the PPP program. We process these loans. We submit these loans to the SBA for their approval. The deposits and wires and payments are going to be processed through us. The SBA is just the governing arm of the Paycheck Protection loan, of the SBA 7(a) loan, of the SBA 504 loan. For most of SBA loan programs that are administered to the SBA, it goes through a lender, whether that lender be a bank, Chase Bank, a Bank of America, Wells Fargo, or a CDFI like Grow America Fund. We work directly with the SBA. We're licensed by the SBA, and we provide direct financing to the business as it relates to PPP and these other loan programs, except EIDL, where you would need to go directly to the SBA. And I'll speak a little bit more about EIDL, but just wanted to give that distinction that GAF or Grow America Fund or your bank or your lender is the direct lender. They're going to deposit those funds into your account. They're going to process your loan. They're going to be the one that communicate directly with you. You're going to be in contact with someone and a representative from that bank or that lender. However, the SBA is the governing arm of these programs. Rather, you cannot go through the SBA to apply for a PPP loan. You must go through an assigned lender or licensed lender, and there are over 5,000 banks and lenders that are participating in PPP and over 1,100 CDFIs across the country. A quick Google search of, hey, here are CDFI, well, directing the CDFIs in my communities will yield results of all CDFIs in your community. And again, NDC, Grow America Fund, has processed over 100 million and growing on PPP loans to over 1,000 businesses. Our main priority is lending to businesses that are located in CDFI eligible areas, which are really low income areas, and to businesses that are minority and women owned, both African American and Latinx owned businesses. Those are our priorities. So of that 1,000 businesses that we're lent to, a pretty high percentage, over 65% of those loans were made to businesses that operate in low income areas or that are owned and managed by minorities. Next slide. So now I want to go into PPP and talk about the PPP program, give you an overview of what the program is, go into detail about the documents you need in order to be able to apply for these loans and get approved for this loan. What is PPP? PPP stands for Paycheck Protection Program. This is a program that was launched in 2020 around March and provides forgivable loans to help small businesses maintain their payroll. I utilize payroll here because payroll really is the guide to the Paycheck Protection Program. It is not the idle loan. It's not a grant program. It is a Paycheck Protection Program. The goal of the SBA when they designed this program is to keep people employed and keep the unemployment rate as low as humanly possible. They designed this program in mind, thinking of that. The loan amount for this program are determined based on average monthly payroll expense for the businesses. And we're going to go into detail on how we calculate those loan amount, how to get those numbers. It is a forgivable loan. However, in order for you to obtain forgiveness, you must apply for forgiveness with the lender that you obtain the PPP loan from. It is not automatically forgiven. Your loan doesn't just go away after you receive the funds. You must apply for forgiveness. And you must show that at least 60% of the proceeds were used for payroll. So you use 60% of it to cover salaries and wages, to cover healthcare benefits, to cover retirement benefits to your employees. You must have those documentation to show in order to obtain forgiveness. And then there are 40% of the loan that can be used for other eligible expenses that include mortgage interest, that includes rent, that includes utilities. The SBA recently added a few other expenses such as PPEs, any modifications you do to your space in order to be in compliance for your state or federal regulations, such as building out your restaurant to make sure you can meet the allowable amount of people you can allow in your restaurant. Things of that nature are eligible expenses that can fall under that 40%. However, at least 60% of the funds must be used for payroll. And payroll includes, again, salaries and wages. These are W-2 salaries, not 1099s. Salaries and wages, healthcare benefit, retirement benefits. And as long as you can document that and show that to your lender, this is a 100% forgivable loan. Again, as I mentioned earlier, the loan is not processed by the SBA. It must go through a lender, it must go through a bank or a CDFI or a credit union or some fintech lenders that are out there, such as Square. I think QuickBooks has partnerships with some banks and can process these loans for you. But again, the loan must be processed through an approved lender. And SBA.gov give you a list of all of the participating lenders in your communities that you can find. Again, NDC is happy to take your application. We have a license to lend in all 50 states. So if your business has not applied yet or has not been able to get in touch with your bank, we provide PPP loans. In addition, what's unique about CDFIs is that we provide that technical assistance. There's going to be someone assigned to your loan. Someone's going to reach out to you. You're going to have a phone number that you can call. You're not just going to be left in the wind after you apply, wondering where your loan is gone. You can always communicate with someone once you submit a full application with most CDFIs. The PPP loan may be coupled with other disaster funding. So you can receive EIDL and PPP as long as they're not used for the same thing. You can receive EIDL, PPP, and other grant programs and other loan programs. So you can couple PPP with other funding resources that are out there. So don't think you're limited to just getting PPP and that's it. You can't couple PPP with other lending programs that are out there. We are in the second round that launched about a month ago. And the program, however, is expected to end at the end of March. So again, if you've not applied, please go apply now. And hopefully at the end of this presentation, you have enough information that can give you comfort that you understand the loan program, you understand what documents you need, you can speak to the parameters and how to calculate your loan amount. Hopefully this encourages you to go take advantage of the program if you are affected, and you can substantiate the use of the proceeds. Next slide, please. As Sandy mentioned, just a few days ago, I believe Monday, the Biden administration made some recent changes to the PPP program. Before I go into the detail about the program, the parameters, I thought I should highlight a few of the changes. The most important change actually went into effect today at 9 a.m. So as of right now, the SBA has established a 14-day exclusive PPP loan application period for businesses and nonprofits with fewer than 20 employees. The reason they created this was they wanted to target the smallest of small businesses that have been practically locked out of PPP both first and second round, and give them an opportunity, exclusive opportunity, 14 days for them to apply. We as SBA lenders are not able to submit loan applications to the SBA, or at least get them approved for businesses that have more than 20 employees. So if your business falls into this category where you have less than 20 employees, this is an opportunity, an exclusive opportunity that may not come again, where you can apply to a bank, you can apply to a CDFI, you can apply to your credit union, you can apply to fintech lenders online, where you have an exclusive opportunity to submit your loan application, to get your loan application processed, to get your loans approved, to be able to take advantage of the program before the funds run out or before the program closes. As I mentioned, this is a program that is not going to be here forever. It initially launched in March of 2020. And I'm trying to grab some data on what the dollars are right now. As of February 21st, a total of about 7 million loans have been approved for approximately $663 billion. In 2021 alone, a total of about 1.9 million loans have been approved for about $140 billion. So about 36% of the loan fund has been exhausted for this second draw. So there is time. However, time is going by really, really fast. So I encourage you to go apply now if you've not already, if you believe you qualify. And again, at the end of this webinar, I do hope that this provides you with enough information and ammo to get you to apply for this program. The second change is that the SBA revised the PPP funding formula for sole proprietors, independent contractors, and self-employed individuals. These mostly has to do with businesses that file Schedule C, as sole proprietors, as independent contractors, as self-employed. Prior to this change, the loan amounts were calculated based on the profits of the business, primarily based on the profits of the business, using line 31 on your Schedule C, dividing that number by 12, multiplying by 2.5 or 3.5 if you were in the hospitality industry. Now the SBA is revising that formula, and I believe that formula is now going to be utilizing the gross profits rather than your profits, which will increase the loan amount that you can get. There's still been guidance prepared, and guidance has not come out on how we will process these loans as SBA licensed lenders, but this is a proposal that the Biden administration have put out there. There's more to come on this revision, but this is good news for businesses that were not profitable and didn't show profits prior in 2019 or in 2020, and were not able to secure financing. This will be an opportunity for you to secure financing now using your top number rather than your bottom number. So this is a very important change that I think you should keep in mind. So if you've applied in the past and your lender told you that you did not qualify because you were not profitable, because you never brought profits on your line 31 as a sole proprietor, as an independent contractor, or self-employed, this gives you an opportunity to now apply using a different set of rules. This revision, I believe, is going to come in place in the next week or so. So be on the lookout for that. We would amend all of our documentation, all of our requirement as the SBA provide guidance. There's not been a guidance put out yet. This is just, again, legislation, but it is not in action yet. The third change is that the SBA eliminated restriction of PPP access to small business owner with prior non-fraud felony convictions. On the back end as lenders, when we make loans to businesses, we do pull some searches that includes Kyogre and SAM and LexisNexis, and in some cases, not in PPP, credit reports and things of that nature. And those reports gives us information, valuable information of the borrower, as well as the small businesses. And prior to this change, we were not able to make loans to business owners that had prior non-fraud felony conviction, or at least we needed to gather additional information and show to the SBA that we were comfortable making these loans. With this change, it eliminates and restricts PPP access, or takes away that restriction for individuals with prior non-fraud felony convictions. The fourth change is that the SBA eliminated restrictions of small business owners who have struggled to make federal student loan payments by eliminating federal student debt delinquencies and defaults. Again, a Kyogre search, for example, will provide us with valuable information on a business owner if they have defaulted on student loans in the past, if they have defaulted on any federal debt, FHA, they've defaulted on SBA debt in the past, and before this change, we could not make any loans to these businesses. But after this change, looks like the SBA is taking away that restriction for specifically for individuals that have defaulted on federal student loans, and allowing lenders like us to lend to those businesses. I can think off the top of my head of at least 5 situations where we eliminated and declined applications specifically for this reason. Now those individuals can now go apply once guidance is provided from the SBA on how we should process this loan. And the last change is to ensure access to non-citizen small business small business owners who are lawful U.S. residents. The SBA has clarified that we may use individual taxpayer identification number (ITIN) to apply for PPP. So these are very important changes. These are changes that have started to go into effect. They started at 9 a.m. this morning. The most important one that you should be thinking about right now is that the SBA again has established a 14-day exclusive PPP loan application period for businesses and nonprofit with fewer than 20 employees. Many thousands and if not millions of small businesses fall into this category. They've been previously locked out. They've not been able to apply. They've not been able to get in touch with someone. Now the SBA is saying, hey, banks, lenders, CDFIs, you cannot submit any applications right now unless that business has less than 20 employees. So if you fall into this category and have not received an approval or have not applied at all, this is your opportunity to do so for a 2-week period. Next slide, please. Now let's go into the program details. We're going to talk about who can apply. We're going to talk about the maximum loan amount, the interest rate, because again, it is a loan. It is forgivable, but at the end of the day, it is a loan you have to pay back if it's not forgiven. What the term of the program is and what collateral or security is required. Let's start with who can apply. Small businesses can apply. Nonprofits can apply. 501c3s can apply. As long as you have fewer than 300 employees for the second round, and for the first round, 500 employees. Self-employed individuals and independent contractors can apply. Sole proprietors can apply for PPP. Everyone has different requirements, and we're going to go over each document set for each type of business. But small businesses, nonprofits, religious organizations, churches, self-employed individuals, independent contractors with fewer than 300 employees can apply for the second draw, and for businesses with less than 500 employees can apply for the first draw. The maximum loan amount is up to 3.5 times your average monthly payroll cost, up to $10 million for the first draw, and up to $2 million for the second draw. I say 3.5 times. I know the general rule of thumb is 2.5, but for the second draw, if you are in the hospitality industry where your NACES code starts with 7.2, you do qualify on the second draw for up to 3 times your average monthly payroll. The interest rate on this loan is 1% fixed. Again, I want to reiterate that this is a loan, that if it's not forgiven, you must pay it back at 1%. And the term of the loan for loans issued prior to June 5th, 2020 have a maturity of 2 years. So it's a 2-year loan for 1% or at 1%. And for loans issued after June 5th, they have a maturity of 5 years. I should mention that for loans issued prior to June 5th, 2020, that obviously will be first draw applications. It is not an automatic 2-year loan. Your bank can decide to extend it for 5 years if they do choose, but they have no obligation to. So I put 2 years there just so you're aware of that. Again, this loan can be forgiven, and we have processed, I'll say maybe 40 to 45% of the loans we processed in the first round have been already forgiven or fully forgiven. But you must apply for forgiveness. Just as you apply for the loan, you must submit an application for forgiveness once your covered period is over. Unless you don't have the right documentation or you didn't use the proceeds for the right reasons, I do not see a reason why you should hold off on submitting your forgiveness applications. I've seen loans be forgiven in full. So I encourage you to go submit your application for forgiveness as soon as possible and as soon as you believe you qualify for it, and as soon as your bank or your lender is accepting forgiveness. I should mention that you can only submit forgiveness to the lender that you received the loan from. So if you got your first loan from Chase Bank, you must go to Chase Bank to submit your forgiveness application. And you do not have to use the same lender for the first and the second draw. You can select another lender if you were not pleased with the way your bank or your lender processed your loan in the first draw. You can elect to utilize a different lender in the second draw. Next slide, please. Oh, I should mention, please go back to the last slide. I should mention that there is no collateral requirement for the PPP loan. So you don't have to pledge your home. You don't have to pledge your business assets. Unlike the EIDL loan where you do have to pledge for loans on over $25,000, the SBA does file UCC lien on your business. The PPP loan, because it's a forgivable loan, there are no collateral requirements. However, each owner of 20% or more must document, must be listed on the application. There isn't a personal guarantee. However, each owner of 20% or more must be documented. And this is a business, a loan directly to the business. As such, an individual must sign on behalf of the business but the liability is on the business. I don't know how the SBA would treat it in the event of default. Someone could not get the loan forgiven and is not able to pay. I'm unsure how the SBA would treat it, but there's more to come on that. Next slide, please. For the PPP first draw, you may qualify if you check these boxes. One, if you have not previously received a PPP loan. So if you did not apply in the first round, you can qualify for first draw right now. You can apply for a PPP loan today with, again, your bank, with a CDFI like NDC, with any CDFI or credit union that is participating in the program across the country. You can apply for a first draw PPP loan today if you have not already applied. Secondly, you must have 500 or fewer employees and meet the SBA industry size standard. And the SBA industry size standard is dependent on your industry. Depending on the industry, each industry has a size standard. I have not met a business over the last year working on this program that does not meet the size standard. So I would assume most businesses would meet this size standard. If you're a for-profit entity or nonprofit, sole proprietor, independent contractor, you're self-employed or tribal business, you may qualify for the PPP first draw. And if your business is not permanently closed, you can qualify. If you were temporarily closed or are temporarily closed or suspended due to COVID restrictions, you are still eligible. However, if your business is permanently closed, you've given up your lease, you're done. You've been impacted by COVID, or just not able to recover. You're not eligible for the PPP loan. Next slide. And then for the second draw, in order to qualify for the second draw, you must have received a first PPP loan. So again, if you did not receive a PPP loan in the first draw or did not receive a PPP loan in 2020 at all, you can qualify for the first draw. However, if you did get PPP in the first draw, you can't qualify for the second draw. However, in the second draw, there are little tweaks to the requirement. You must have 300 or fewer employees. It was 500 in the first draw. Now it's 300 in the second draw. And if you have, if you're an employer, if you're a business in the accommodation or food service industry, NACES code starting with 7.2, you may have 300 employees at each of your physical location. So if you have a restaurant and you have less than 300 employees in each location can apply and qualify for a PPP loan. And again, your business must not be permanently closed. You cannot be permanently closed and qualify for PPP. However, if you're temporarily closed or suspended, you are eligible. You must have or will use the full amount of your first PPP loan for the authorized uses, which we went over, 60% for payroll, 40% for everything else. You must have exhausted these funds prior to receiving your second draw PPP loan. Prior to the date the funds are dispersed, you must have exhausted these funds. And lastly, for you to qualify for the second draw, your business must be able to demonstrate a revenue reduction of 25% or greater in 2020 relative to 2019. So what the SBA did here is saying, hey, for businesses to show that you were actually impacted by COVID, you must be able to show via profit and loss statement, via tax return, via bank statements, via book of records, that you did, in fact, see a revenue reduction of at least 25% or greater, whether for the whole year, for 2020 versus 2019, or for a corresponding quarter. So January, February, March, first quarter 2019 versus first quarter 2020, you must be able to show and demonstrate a 25% revenue reduction. And some lenders, including NDC, will ask for documentation. So you need a profit and loss statement. I've seen folks use bank statements and highlight what is revenue and add it up at the top of the bank statement. But some lenders are requiring that you submit it. SBA does not explicitly require for loans under $150,000 that you submit documentation to show the 25% reduction. However, some lenders have been a little bit more prudent in asking for this documentation upfront. Whether you submit the documentation now or not, you will be required to submit the documentation for you to get the loan forgiven. So for you to be able to walk away and consider this a grant, this is one of the requirements. You must be able to show documentation that you did in fact see a revenue reduction of 25% or greater, 2020 versus 2019. Next slide. Now let's go into the documents that are required. I broke this up into sections. The first slide, as you can see on the screen, shows you what documents you generally need when you approach a lender for a PPP loan. So this is a document that all type of business structures, whether you're an LLC filing as an S Corp or an LLC filing on the Schedule C, whether you're a C Corp, whether you're a partnership filing 1065, you're going to need a combination of these items. And then we're going to go into each type of specific corporate structure or tax structure, what documentation you would need. You're going to need your 2019 business tax return. You're going to need a February 2020 bank statement, a book of record, or invoices to show that you were in business on February 15th, which is the date the SBA determined that the pandemic and the COVID-19 pandemic started. So you must have been in business on that day. So you would need to show a bank statement or a book of record or some type of invoice to show that you were in operations on that day. You would need your 2019 personal tax return for every business with 20% or more. A copy of your photo ID. If you're going through your bank may already have these documents and may not request it. But if you were going through a lender that you have no relationship with, these are documents that they may require. And as I mentioned earlier, if you're going through for your second draw, to calculate your revenue reduction, you're going to need to show some form of documentation to indicate to the lender that you did see a 25% reduction, especially if you're applying for a loan over $150,000. And this can be a profit and loss statement, or also known as an income statement that you pull from QuickBooks or Gusto, wherever third-party reporting system you utilize to manage your financial reports. A profit and loss will be certainly needed, or a bank statement just showing, hey, here's how much I made in the first quarter of 2019 versus 2020. Here's the 25% reduction, signed and dated. SBA is requiring that these forms be signed and dated. Next slide, please. And then now let's go into the document requirements for sole proprietors, for independent contractors, for single member LLCs filing Schedule C. Here are the list of documents in addition to the general documents we just went over that you will need. An IRS Form 1099 miscellaneous for independent contractor. If you did work on a part-time on a contractor basis with an organization providing maybe consultant services, for example, at the beginning of the following year, they usually will provide you with a 1099 miscellaneous form that lists out how much you were paid as a non-employee, as a contractor. We're going to need this form, and lenders are going to need this form to substantiate your revenue figure on your Schedule C. We're going to need the actual IRS Schedule C form, whether that be for 2019 or 2020, depending on what year you're going to utilize to calculate your loan amount. This is relevant for independent contractors, for sole proprietors, for single member LLCs. If you file Schedule C and had employees in 2019 or 2020, the lender is going to need your IRS Form 941, which is your quarterly wage filing and payroll filing, or your IRS 940, which is your annual. If you only have the 941, you obviously need to provide one for each quarter, quarter one, quarter two, quarter three, quarter four. Or if you have the 940, which is the entire year, you don't need to provide your 941. So it's either or. Or you can provide a payroll summary report from a reliable third party, such as QuickBooks, or W-2 for all of your employees, which the reason why lenders are asking for this is because, as you know, we need to be able to determine if any employee made over 100,000, as the maximum for each employee is $100,000 in order for you to be able to qualify for the PPP loan. In addition to these documents, we also need the state quality wage, unemployment, insurance tax reporting forms. In New York, I know it's called the NY45. In Florida, I know it's known as the RT6. It should have the same or very similar information to the 941 or the 940, listing out, here are the employees I paid for this quarter. Here's how much each employee paid. Here's my, as an employer, tax and state liability that I need to pay to the state governing agency. But these are documents, again, that will list out each employee and summarize how much you paid in payroll. And this is how, as a lender, we determine your loan amount. We take the 940 and take that whole number, the total number payroll, subtract any employee that made over 100K, add in your healthcare benefits, add in your 401ks, retirement benefits, and any other benefits that you offer. Add your state and local taxes, divide that number by 12, multiply by 2.5, or multiply by 3.5 if it's a second draw, and if you're in the accommodation industry, to determine your maximum loan amount. Next slide. For corporations, in addition, again, to the general items, these are 3 main items that you need: the IRS Form 940 or IRS 941s. And a corporation, when I mean a corporation, I mean you're filing as an S Corp, either 1120S, or as a C Corp, just an 1120. You're going to need an IRS Form 941 or 940. You're going to need a payroll summary report listing all of your employees, how much they paid, what was your as an employer state and local tax liability, what are the benefits that they received that year, or W-2, just simply list down, here's how much I paid each employee. The lenders need this in order to be able to calculate your loan amount. So if you don't have these items readily available, I will recommend that you start to reach out to your accountant, reach out to your payroll processing company to start to gather these documents. And as I mentioned, you also need your state quality wage, unemployment insurance, tax reporting forms, which in New York, again, is an NY45, and in Florida, is known as the RT6. Next slide. For partnerships, this is a unique one. In addition to the first 3 items, which are almost identical to what, actually they are identical to what you will submit as a corporation, lenders are also going to ask for your IRS Form K1 for each partner. So there are 2 partners with 50% ownership. You do send a K1 at the end of the year or at the beginning of the following year. That summarizes, here's their portion of the income and their tax liability. Yes, what their flow through will be. Why this form is important is because in addition to your payroll, the lender is able to determine an additional loan increase to your loan, potential increase to your loan amount by utilizing your K1 and box 14A to determine any addition to your loan amount that could potentially increase your PPP loan. So this is super important. Is to also gather your K1 as a partnership. Don't leave it to the hands of the lender to determine what your maximum loan amount is. Now you know what document you need to provide to the lender as a partnership, filing a 1065 to determine your loan amount. I should reiterate that you have the option to elect what year you utilize to determine your loan amount. It's 2019 or 2020. Most businesses have used 2019, at least that I've seen, because that's the year they had the highest payroll cost. If 2020 was a better year for you as it relates to payroll and you had a higher payroll cost, you have the choice to elect to use 2020 as well. And in that year, you will need to provide these documents as a partnership, in addition to your IRS Form K1 for each partner for a potential increase in your loan amount. Next slide. So let's go back 1 slide. I know I see some questions in the question box, and we're going to go over these questions at the end of the slide. But that's the overview of the PPP loan program. There are obviously unique situations that I'm happy to speak to, and happy to take questions on them at the end of this presentation. But that's the big picture summary of the PPP loan program. Again, I should reiterate that the program is not going to last forever. It's a temporary program that went into effect in March, about a year ago, and that it's expected to end on March 31st, 2021. If you have not yet applied, please go apply. You can find a lender online. There are over 5,000 lenders participating in this program right now. We included, NDC we have a priority as a CDFI to meet the needs of low-income areas, to meet the needs of minority-owned businesses. So we are prioritizing those businesses. But if we're not able to help, there are other lenders out there that can help. You can go to your bank, a quick, again, Google search of what CDFIs are in my state or what CDFI are in my area. Will yield a list of lenders that are participating. The SBA's website is also a good resource. SBA.gov, where you can actually match with a lender based on criteria that you enter. You can match with a lender, have contact information for that lender, and reach out to the lender. My phone number, my email, my contact information is at the end of the slide. Sandy's is also included in this presentation. So you can always give us a call. You can always shoot us an email. Every time I give these presentations, I get calls and emails, and I'm happy to always provide context and provide additional information and walk you through on what you need to gather for your specific and unique situation. There are FAQs everywhere on SBA's website that you can go to and find out information about your specific need. I promise you that 90% of the time, there's someone out there that has the same situation as you and has already asked this questions, and the SBA has already thought it through. There are unique situations that I've not been able to help and I've not been able to answer, but for the most part, over 90% of the time, I've been able to provide some context, provide some assistance to small businesses, provide answers. Sandy's been able to point them in the right direction, point them to the appropriate lender. But the loan program is out there. It's designed. It's been around for almost a year. Businesses have taken advantage of it. Businesses have gotten their loans forgiven. Businesses continue to take advantage of it. And there should be no reason, in my opinion, why you do not. If you're affected by COVID, you can show, again, 25% reduction for the second draw. You have payroll, or as a Schedule C filer, you have profits, or now you have gross receipts and you have gross profits. There should be no reason why you don't apply for PPP or other loan programs that are out there. I'll take a step back, Sandy, before I jump into the idle loan. Do you have anything to add on PPP?
No, nothing additional to add. Thanks for that, Oseremi. Nothing additional to add. We definitely want to just try to get to some of the additional questions. But on that PPP, and one of the things that Oseremi was emphasizing is an understanding for this second round, just like one of the questions. Congress did try to carve out more opportunities, just as one example, on the NAICS codes dealing with restaurants. They're going to be the group that's allowed to do the 3.5 multiplier versus the 2.5. It's those unique things that we want to make sure you as a business, as you're preparing to take a look at some of these, you also see if there was something that's speaking specifically to you and your business that you want to make sure your application is dotting the I's and crossing the T's. But other than that, certainly, we'd rather spend this time getting to any questions you may have that's in the chat box, or as the moderator helps us through, determine any questions that they're allowing you to ask out loud, or whatever the instructions are.
Yeah, before we go into those questions, I have a few more slides I just want to go through.
We'll go right ahead then. I'm sorry. Go right ahead then.
No worries. I'll talk about IDLE a little bit, and then I'll go into some programs such as SOAR, New York Forward, I think folks can benefit from. Again, as Sandy mentioned at the beginning of this presentation, the Economic Injury Disaster Loan Program has been around forever, frankly, before I was born. For each pandemic or each disaster that happens, the SBA try to design a program to meet the needs of specific demographics or specific locations. In this case, it was COVID, and a lot of folks heard about the idle loan, and I've met a lot of businesses that have benefited. Just quickly, this is a loan program where you do not need to go through a bank. You do not need to go to a specific lender. You must go directly to the SBA. The SBA has hired a ton of contractors and that are processing these loans. But the purpose of the loan is, as shown on the screen, is to meet the financial obligation and operating expenses that could have been met had the disaster not occurred. So really, IDLE was designed to help stabilize your business as it's affected by whatever pandemic, in this case, happens to be COVID-19. The terms of the loan are very flexible. For businesses, it's a fixed rate of 3.75%. And for nonprofits, it's a fixed rate of 2.75%. It is a long-term loan, so it is a 30-year loan. So you're paying this loan over a long period of time. If you ask me, should I pay it off earlier? I don't see why not. I do not, frankly, would not want to carry this debt for that long. If you're able to, you should consider paying it off on time. But if you're not, it's fine. That's why the terms are there. It's a 30-year loan. And there are no prepayment penalties or fees. So if you do qualify for the program and you do your business for whatever has rebounded in the next 2, 3 years, 4 years, 5 years, this is an opportunity where, there's no prepayment penalty and you can choose to pay this loan off even earlier. The use of proceeds is for working capital and to cover your normal operating expense. I do know that in reading some closing documents, the SBA has some vague restrictions on how to use the money and the ability to come back within the first 3 years of you getting the funds to provide documentation on how you use the proceeds. Unlike PPP, this is not a forgivable loan. So this is a loan. It's going to stay on your books until you pay it off. You're going to make monthly payments every month until you pay the loan off. It is not forgivable, at least not as of right now. Anything can happen. I don't know. Things are pretty fluid right now, so there might be changes. Who knows? But as of right now, it is a loan. So once you sign those closing documents, you have to pay this money back. Collateral requirements for loans over $25,000. The SBA generally uses UCC designation on your business assets as collateral. So machineries, equipment, your chairs, your table, whatever that is, the SBA does take somewhat of a blanket lien or the best available position on your UCC on your business assets as collateral for this loan. Excuse me. As I mentioned, the maturity of the loan is 30 years. The first year payments are deferred, and then so when you do the math and on your amortization schedule, you calculate your loan really based on 29 years and not 30. The idle loan is available as Sandy mentioned. My understanding, there's no second draw for the idle loan. So if you already received it, you may not be able to reapply, but if you've not, it's an opportunity to apply. I do know that SBA is giving priorities to businesses located in low income areas right now, especially for the $10,000 up to $10,000 EIDL or economic injury disaster loan grant. SBA is giving priority to businesses in low income areas. As Sandy mentioned, you do not need to do anything to receive the grant. The SBA will make the determination and reach out to you and let you know that, hey, you qualify for the grant, and likely drop the grant into your bank account. And the grant, I should mention, is not required to be paid back. It is a grant in its entirety. And I know there was confusion in the first draw where businesses needed to pay it back when they were getting forgiveness for the PPP first draw. That's gone away. It's totally a grant. You don't have to pay it back. There's no obligation to. But the economic injury disaster loan must be repaid in full for the duration of 30 years with no prepayment penalty, and at 3.75% or 2.75 for nonprofits. Next slide. These are other funding opportunities that I think businesses should think about and should certainly apply. These are just a few. There are thousands of opportunities out there, and the offices like Sandy's office provide you with so many information that you need to know about these loan programs. I want to talk about 4 of them in particular. Actually, I should probably just go through all of them. I'll start at the top. The Shuttered Venue Operations Grant. It's another loan program directly by the SBA, where I put a hyperlink here, and we'll share these links at the end of the presentation, where you can receive loans if you have a venue of up to $10,000. A nationwide program. You can apply now. Folks are taking the SBA is taking applications. I do know that you cannot receive the Shuttered Venue Operations Grant and PPP right now. So it's either or. There's more information on the SBA website, so I encourage you to read it. And I also encourage you to go directly to SBA's website to get information rather than third party, as their information will be the most current and the most accurate. And you can certainly reach out to the SBA or your district office to learn a little bit more. I mentioned earlier about the SBA 504 program or SBA 7A program. Just briefly, the 7A program is a program that's been around for a long time as well. Provides capital to businesses up to $5 million, usually for really anything you could think about that's related to growth or to start your business. Startups can benefit from 7A. You can use it for working capital, to buy equipment, to refinance high interest debt, to purchase property, to purchase a business acquisitions fall under the 7A. And the 504 is also a unique program that has been around for a long time and provides businesses up to $5 million to purchase real estate, owner-occupied real estate. So if you've been running your business for 10 years and paying rent to a landlord, and it dawned on you that you can save some money by owning your own property, the 504 loan program is a perfect loan program where there's some cost benefits to the program, where it's a 50-40-10 kind of loan structure, where the first mortgage is by a bank, and then the second mortgage, that 40%, is by a CDC, and then you have to come up with the 10%. So there's the benefits there. One, the benefit is that there's low cost for you as it relates to your down payment or your equity contribution. It could be as low as 10%. And the second benefit to that program is that second mortgage, that 40%, you do not pay a mortgage recording tax on it, which could be tens of thousands of dollars depending on where you're located. So that's a program that you should look into. This link will direct you to the 7A and the 504 program, and you can learn more. NDC is a licensed 7A lender. We're not a 504 lender, but you can, through your bank, find a 504 lender, as they will always have a partnership if they make 504 loans with a CDC, which is usually nonprofits that lend under that program. And one last thing on the 504-7A program, there's been a lot of benefits over the last year where businesses that already have loans under these programs benefited from subsidized payment from the SBA for 6 months. And again, will benefit from for up to 3 months in this year, where the SBA is picking up the tab on their principal and interest payments. So if you do not already have an SBA 504-7A loan, or you think you qualify, that's another program you should look into and highly consider. I'll go quickly on these other loan programs. New York Forward Loan Fund is a program that NDC is a participating CDFI on. It was a fund that was created over $100 million here in New York State, where the state came together with other banking partners and foundations and 5 CDFIs to make loans up to $100,000 available for businesses across the state of New York. It's a cash flow based loan. It is a loan. Interest rate is at 3%. Up to $100,000. There are no fees for this loan program. You can couple this one with EIDL up to $150,000, PPP up to $500,000, and still get up to $100,000 to help your business stabilize. It's for businesses that were affected by COVID and can show the ability to repay. There are personal guarantees required for owners of 20% or more. And the collateral, similar to the EIDL, is really just a blanket lien on your business assets or whatever position the lender falls into. The link here will also take you to information on the program. It's a matching system where you get matched based on the answers to questions to a specific CDFI, NDC being one of them. And you can get funded in as quickly as a day, 2 days, up to 100K. So again, in addition to PPP, to EIDL, to the Shutter Venue Grant, to SBA 504, SBA 7A, if you're in New York State, this is an excellent program that you should consider. We've made as a CDFI over $10 million under this program. Next one is the Southern Opportunity Resilience Fund, which Sandy spoke about. This program is not launched, so there are more details to come. However, it is basically a New York forward loan fund, but adding more states. As a CDFI, we are going to participate. The requirements for SOAR, as it's known, it's very, very similar to New York Forward. It gets you up to 100K. You can couple it with EIDL. You can couple it with PPP. And those states that I list here are going to be where there are about 10 CDFIs that are participating in SOAR, covering these states. I know we're going to be in Delaware. We're going to be in Georgia. We're going to be in Florida. We're going to be in Maryland, I believe, and we're going to be in Texas. So these are states that we're going to cover, but there are other CDFIs that are covering this state. So if your business is located in any of these states, look out for SOAR. It's going to launch in about 2 weeks. That's an excellent program that you can consider. And then 2 other loan programs, the Kyogre County Stabilization Fund. I personally run this fund. It's in Kyogre County, Ohio, which is the Cleveland area and the surrounding cities in that area. It's up to $10,000. It's a really good program. Interest rate is less than 1%. It's a 1-year loan. I think monthly payments are about $5. There is a balloon at the end of that 1 year. However, as prudent lenders and good lenders and community lenders, our goal isn't to have you pay $10,000 if you can't afford it. If you, at the end of that loan program, you can't, we will stretch it out for 4 or 5 years to meet your needs. And then lastly, the Broward Municipal Service District Revolver Loan Fund, which is a fund that Sandy and Sandy's group and our group and NDC actually came together to launch over about 2 weeks ago. And it's specific to the Broward Municipal Service District. It can get you loans up to $150,000, a really flexible interest rate. This is a program that I helped design with help from Sandy, and I'm very excited about. You can couple this loan program again with every other loan programs that we've talked about. The intention is to meet the need of a specific district in Broward, and Sandy and his group has done a great job of designing this program. And this is another opportunity that you can apply for if you fall into this. Again, there are many other programs out there that I just cannot even start to list. But use your phone, your internet as a weapon. There are a lot of programs out there that you can benefit from, both loans and grant. But as Sandy mentioned, the grant programs are going to run fast. But there are loan programs that can provide you with flexible capital, good interest rate, good terms that you can benefit from. And I'm happy to provide more context depending on where you're located. Please feel free to contact me, contact Sandy, and we'll be happy to help you out. Next slide. Let's connect. I don't know, it came out a little funky, but my email is on the screen. My phone number is there. You can also visit us at ndconline.org. I try to make myself as available as possible. We have a team here. We've hired more contractors at NDC than we've ever had. We actually have more contractors than we have employees, just to meet the needs of the small businesses in the community. So we're available if you need to reach us. Sandy and his group and his team in Broward are also available. But please feel free to not be shy. Please contact me. Text messages, calls, emails. I try to make myself available as much as possible, but please use us as a resource to help meet your needs. Thank you.
All right, this is Gatwiri again from Compto National. Sandy and Oseremi, thank you for that presentation. We're running over, but we're going to try to answer as many questions as we can. I'm going to start with the Q&A box. Once again, if you have questions, please put them in the Q&A box. I'm going to start with the Q&A box first. So we have a question from Ryan Dukes. How long does the LLC need to be established or running to qualify?
It's an excellent question. You must be in business as of February 15, 2020 in order to qualify for the PPP loan. I will assume you're referring to PPP. So yep, you must be in business as of February 15, 2020.
Okay, so our next question is, there is currently a $150,000 ceiling on EIDL loans imposed by the SBA versus the $2 million authorized by the program. Do you think SBA will lift that ceiling?
It's a great question. I'll let Sandy jump into this one, but my response to that is I do know about the $2 million ceiling. The maximum I've seen someone get is about $180,000. I'm not sure why. I think they're just trying to spread the money across and around and make sure it gets to the folks that need it. But that's the best answer I can provide. I'm not sure, but I do know it's up to $2 million, they say, but 150 is usually kind of like the ceiling there.
No, that's a good answer, Oseremi. I think the initial intent even now was to spread it out as much as possible. So it probably won't be so much about raising that ceiling. It might be about readjusting. Again, don't own me on this. It might be about readjusting at a later date to allow larger distributions of actual funds. But I know it was actually as a part of several conversations, just trying to get as much out there as possible because everybody believed how everyone was actually hurting. So a ceiling, let alone different than what they actually been cutting checks for. I don't know if the ceiling is ever going to go up, but I do believe they'll be talking about larger checks.
All right, so the next question is, under the special rule effective today, will the 25% revenue comparison period eliminated for the NFP organization under 20 employees? I'm not sure if I read that right.
Yeah, I think the question is that will they eliminate the 25% revenue comparison based on the new special rule that's in effect? Excuse me, I've not read that. I think that 25% reduction still stays in place if you're applying for the second draw. I do not believe it goes away. I don't think it would because the intention of the program is to meet the needs of businesses that are affected. How the SBA came up with that 25% number, no clue. I'm sure they did some analysis and figured 25% was the right number. I don't think that rule is going to go away. It is not. It's still a requirement. You must show 25% revenue reduction in order to qualify. Yeah, that's. I don't know if Sandy.
Correct. That 25% reduction rule is going to stay in place. This next 14 days is really about focusing on those businesses with 20 employees or less, but that reduction is not changing.
All right, so we have one more question in the Q&A box and then I'll go to the chat. So in the Q&A box, we have, if you have locations in more than one state, can you apply separately for each location?
Short answer is yes, you can.
Okay. All right, let me go to the chat box really quickly. The first question was, is NDC affiliated with NeighborWorks America?
Not to my knowledge.
Okay. So the next question is, who makes the ultimate decision as to whether loan forgiveness is given once submitted to the bank?
That's a great question. The SBA does. The SBA makes the final decisions on the approval of the loans as well as the forgiveness of the loan. As additional context, when you apply for forgiveness, the lender has 60 days to make their decision and submit it to the SBA. And then the SBA has an additional 90 days to make a final decision. But the SBA, they have the gold, they make the rule, they have the final say, not the lender.
Okay, so I don't know if this is the same question under the.
That's the same one.
That's the same one. Okay. Can I apply for this program? So can I apply for this loan program as the sole proprietor? That's what someone's asking.
If you're referring to PPP or EIDL, yes, you can. Yes, you can. You qualify based on the rules. You can apply. You should, for sure.
Someone says sole proprietors are allowed to apply for.
Yeah, I was responding to her question. I went on and gave her an answer.
Okay, no problem. Let me just check the Q&A box one more time. That's all I see in the Q&A box and in the chat box. So that being said, I'd like to just wrap everything up. Oseremi, Sandy, any more thing you want to say before we close out?
The only thing I would want to say is not only thank you to National and thank you, moderator, but seriously, and Oseremi mentioned it. I know I'm in Florida. I know we got listeners all over the country. This is a DBE directive today. So feel comfortable emailing me, asking me those questions, because we're trying to empower all of our DBEs, all of our Compto participants. If there's any additional information we can give you, and as Oseremi mentioned, definitely reach out to his organization, especially if you're trying to submit an application, especially right now, if you happen to be one of those DBEs with 20 employees or less, and you want to take advantage of this next round. We want you to get the resources that are available to you right now, but also the other resources he made mention of. Those are going to be the resources that are still going to be here post-COVID. Begin to familiarize yourself with organizations like mine, organizations like his, and make sure as a DBE, you have the access to capital and support you need to be sustaining. But again, thank you, Compto National, for allowing us to share this with our members.
Thank you. So I know people have to leave. I just wanted to put in a few plugs for some Compto events coming up soon. Tomorrow we have our Black History Month celebration where we will be celebrating history making at the state DOT level. That'll be moderated by Mr. Phil Jackson, and we have directors and secretaries of departments of transportation from Ohio, California, Illinois, and Louisiana. We will have another small business webinar on March 9th, Tax Advice for Small Businesses, which will be led by JT Goldstein. On March 11th, we'll have our Women's History Month program featuring women CEOs from around the nation. On March 25th, in celebration of Compto 50, we'll have our Historical Perspectives webinar discussion, which is part 2, where we will have Compto pioneers, leaders, and legends talk about their experience in Compto. And then April 14th, our Emerging Leaders Committee will have a webinar on work-life balance. And we are having a campaign called 50 for 50, where we are asking all of our members and supporters to donate $50 for our 50 years of service to the community. And finally, if you have any questions or want any more information about Compto, you can go to comptonational.org, where you can find our events calendar. You can find out more information about our 50 for 50 campaign, as well as membership and joining Compto. So once again, someone asked if we will be sharing the PowerPoints. Yes, we will be sharing the PowerPoints and also sending you a recording of this webinar. With that, I would like to thank everyone and have a good rest of your afternoon.
Thank you all. Have a good day.
Thank you.